This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you in part by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
October surprise. The economy powers through the government shutdown and adds way more jobs than everybody thought last month. The impact for the Fed, the markets, and you.
Jobs generator. This sector once again was the top job creator in the economy, as it has been for the last 4 years. Why travel and leisure is hot, hot, hot.
And honest account. What the makers of a leading beverage brand have in store for their next act. All that and more for this November 8th of 2013. Good evening, everybody. I'm Sue Herrera, in tonight for Susie Guerin.
And I'm Tyler Matheson. Welcome, everyone. Well, the U.S. economy showing resiliency in October, shocking just about everyone, shrugging off the partial government shutdown and adding significantly more jobs than predicted. 204,000 people, to be exact. That's the number added to payrolls last month, blowing away the consensus forecast of 120,000. The unemployment rate, however, did tick higher to 7.3%. Hampton Pearson digs deeper.
In October, job growth accelerated, with employers looking past the government shutdown and debt ceiling fight. In addition to the 212,000 private sector jobs created, data was revised for the previous 2 months, adding 60,000 more workers. And the growth was widespread. Leisure and hospitality, retail, manufacturing, and healthcare all gaining strength last month. But the Labor Department says some 448,000 government workers were laid off due to the shutdown, boosting the unemployment rate to 7.3%.
The economy continues to be resilient, notwithstanding these self-inflicted wounds. But the numbers also show unemployment went up.
Baltimore-based Fireline Corporation is one small business growing and prospering in spite of the Washington turmoil. They service and install every type of fire protection device and service you can imagine for commercial businesses, generating around $20 million a year in annual revenue and jobs for 160 workers. A growth plan that began more than a decade ago is now paying off. 4 years ago, at age 27, Anna Gavin took over a family business founded by her grandfather back in 1947. And yes, she's hiring.
The hiring that we're seeing, we're hiring designers, we're hiring technicians, and then what happens eventually is then you end up having to hire administrative people to support those functions and support that growth.
There are still lots of headwinds in the overall jobs market. The labor force shrank again last month, declining by some 720,000 persons who simply stopped looking for work, bringing the participation rate down to its lowest level in 35 years. For Nightly Business Report, I'm Hampton Pearson in Washington.
Stocks took off on the news of that jobs report. There was some added good news on the economy as consumer spending and income both rose. But the market shrugged off an unexpected drop in consumer sentiment. So all in, the Dow rose 167 points to close at an all-time high of 15,761. The Nasdaq jumped nearly 62, and the S&P 500 added about 23.5 points. But interest rates spiked, with the 10-year Treasury bond hitting 2.75%. But one question did arise. If that jobs number was so strong, suggesting the underlying economy is firming up and the markets are concerned with the Fed starting to ease up on its bond buying purchases, why did stocks go higher? Well, we asked Bob Pisani.
The surprisingly strong October jobs report pushed interest rates up again today. Yields on 10-year treasuries are now at 6-week highs, and that's putting pressure on interest rate sensitive groups like utilities, home builders, telecom, and real estate investment trusts, all of which are down for the week. But the idea that just because interest rates go up, the stock market is supposed to go down, didn't hold water today. Yesterday was the worst day for stocks in 2 months. But aside from interest rate sensitive names, most of the market was up today, particularly beaten up groups like biotech stocks, oil and gas stocks, airlines, and momentum names like Zillow and Netflix. Now, part of today's strength was also due to financials. Higher rates are generally good for banks because it increases the chances that the banks can charge higher rates for loans. Finally, Twitter had a slam-bang debut on the New York Stock Exchange yesterday, but it drifted lower on its second day of trading, ending down 7%. For the week, the Dow Jones Industrial Average was up 1%, and closed at an historic high. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So what does today's jobs report mean for the overall economy and the financial markets? Here to help us put some context around it is Joe Davis. He's the chief economist at Vanguard, the big mutual fund company. Joe, welcome. Good to have you with us. Two important numbers.
Thank you, Tyler.
Terrific to have you here. Two important numbers the past 2 days. Jobs today, obviously, the economic growth numbers yesterday. How strong is the economy in your view right now? And is it strong enough for the Federal Reserve to dial back on its bond purchases?
Well, certainly I believe it's strong enough to just weather a dialing back of the Federal Reserve. I mean, our theme for our investors throughout the year is that despite the headwinds the U.S. economy faces, is that its resiliency may be underestimated. And I think today's jobs report just underscores that sort of theme, is that despite the headwinds, the private sector in particular is weathering those sort of forces very well. And so I would expect more positive, formative news on the labor market front over the next several months. And so I think that clearly brings into focus a Federal Reserve that is beginning its tapering program.
You know, Joe, the other aspect of it, though, is that the participation rate dropped so dramatically. Does that worry you at all? And might it concern the Fed enough that they hesitate to pull back because people are leaving, they're discouraged?
It does. I mean, I think that's the biggest question among economists and hence for investors as well, is how much of that drop in the labor force participation rate is temporary, meaning it's not permanent, and that some Americans may return to the workforce and actually look for work. This is actually the single biggest variable with respect to when the Federal Reserve may start to raise interest rates longer term over the next several years. We are of the view that part of that drop we have seen is more temporary or cyclical, which means there is still a decent amount of slack. And so what we are closely watching is wage growth numbers, which in aggregate, even in the report today, is still around 2%. And so it's not suggestive of a very tight labor market, even if we would have consistently strong numbers, much like we saw today.
You know, Joe, you point to the idea of temporary jobs, that being maybe one constituent here. But there are also a lot of people who are working in part-time jobs and at low wages in today's economy. The underbelly of this jobs report is a little soft, isn't it?
Yes. I mean, you can point to the fact of the percentage of jobs that are so-called part-time. It is elevated. It's been elevated since 2008. Tyler, as you know. But that said, if you look back over the past 3 or 4 years and you net out the volatility in those numbers, around 80 to 90% of the jobs created have been full-time. Now, that said, there are some industries that are clearly more high-paying than others. And I think that's a force that we're going to have to contend with in the economy, not just for next year, but for the next several years, given globalization forces. So there are clearly areas of softness in terms of hours worked and wage growth that we can point to, but clearly an important ingredient for the Federal Reserve and for investors going forward is that we have some underlying strength, and I think we saw that today.
You know, you mentioned the Fed maybe pulling back on its bond buying. Yeah. Does that start as soon as December or perhaps early in the new year? And how aggressive might they be in terms of that cutback?
Well, I don't think we'll see tremendous amount of aggressiveness. So, I mean, I think they're going to want to see consistent, compelling evidence of this strength. I mean, just this time last month, there was a considerable concern that the jobs report was too weak. And so I think we're going to want to see consistent evidence. I think, though, a December announcement is possible. I think much more likely could be in the first quarter, particularly January. I think, though, for investors, actually, we continue to be of the mind that it's good news if we are talking about a Federal Reserve that is undertaking a tapering program, because that means the underlying strength of the economy can actually weather and is actually in need of less stimulus. So this is definitely good news.
Joe, we'll leave it at that. Thank you. Joe Davis, Chief Economist at Vanguard.
Thank you.
More and more Americans are letting their fingers do the shopping for them. ComScore, a leader in measuring the digital world, says third quarter desktop-based sales rose 13% year over year, $47.5 billion, 16th consecutive quarter of increases.
It has been a rough week for the White House and its embattled healthcare website. The promise has been made to have all the bugs worked out by the end of the month. But as Bertha Coombs tells us, that might be a tough promise to keep.
Touring a call center in Atlanta, Kathleen Sebelius said the administration is searching for a way to help the millions of Americans whose health plans have been canceled, but who won't qualify for insurance subsidies under the Affordable Care Act.
We're looking at a range of options. I would say there is not a specific proposal.
After weeks of being on the defensive, it's a marked shift in tone from the administration, echoed by the president himself. In an interview with NBC News, he apologized for his oft-repeated blanket pledge that if people liked their plan, they'd be able to keep it.
I am sorry that they are finding themselves in this situation based on assurances they got from me. We've got to work hard to make sure that they know we hear them and that we're going to do everything we can to deal with folks who find themselves in a tough position as a consequence of this.
The president maintains many Americans will find better deals on the online insurance marketplaces and pledged that the troubled federal site healthcare.gov will be fixed by the end of the month in time for people to enroll for coverage that starts January 1st.
I'm confident that it will be even better by November 30th, and that the majority of people are going to be able to get on there, they're going to be able to enroll.
But with hundreds of fixes still to be completed on the federal exchange, even the president's supporters are expressing doubt that the problems on the site can be resolved in the next 3 weeks.
I worry about the glitch because they've set an artificial deadline of December 1st, and in my experience in tech rollouts, that's going to be tough.
You don't think they're going to make it?
I think it's going to be tough. I really do.
State-run exchanges have been reporting their enrollment process has been going more smoothly, in contrast with federal officials who have so far refused to provide numbers until next week. But even local enrollment numbers have become a point of contention. Republican Senators Chuck Grassley and Orrin Hatch released new figures from the 4 insurers offering plans on the local Washington, D.C. exchange. The insurers reported as of the end of October they'd only received 5 official enrollments combined. That contrasts with the district's exchange reporting that 320 people had selected plans as of October 21st, with more than half requesting invoices. It's a wide discrepancy, to be sure, but Washington, D.C. officials say there is an explanation. Enrollment doesn't become official until the first premium payment is received, and enrollees have until mid-December to make that first premium in order to start coverage on January 1st. Bertha Coombs, Nightly Business Report.
It is now official. Stephen A. Cohen's SAC Capital Hedge Fund pleaded guilty to criminal fraud charges today as part of a $1.8 billion deal to resolve a long-running insider trading investigation. And although authorities have not charged Mr. Cohen himself with wrongdoing, prosecutors said that they will continue to investigate potential wrongful trading by individuals at the one-time $15 billion hedge fund. Coming up as we continue, our market monitor tells us why some consumer stocks may be the way to go in this market. His picks are next, but first a look at how the international markets fared. Chrysler is recalling 1.2 million Ram pickup trucks, mainly in the U.S., to check for a front-end problem that could cause a loss of steering. The largest part of the recall covers an estimated 840,000 Ram 2500 and 3500 trucks from the model years 2003 through 2008. Their defective tie rod assemblies will be fixed at no charge beginning in January.
Well, as we told you earlier, much of the growth in today's jobs number came from hospitality and leisure. But it's not just today's number where that's been the case. Simon Hobbs now with a look at this big jobs generator.
Anything else? Whether it's that takeout franchise, the luxury hotel, drinking establishment, or the fitness staff at your gym, month after month, leisure and hospitality has consistently generated more jobs than other parts of the economy. In fact, of the almost 7 million non-farm jobs generated over the last 4 years, 18% have come from leisure and hospitality, according to the Bureau of Labour Statistics. It's partly because the industry is coming from a lower base, absolutely slammed in the wake of the financial crisis. Now business travellers are travelling again, and tourists from home and abroad. You can see it in the results of big hotel brands like Marriott.
What we've seen is occupancy has built back to essentially peak levels, and so we're full midweek. And we've seen that we've been able to both raise like-for-like pricing, but also shift towards higher-rated business.
Demand is also returning for the airlines, and as with the hotels, capacity or new supply remains restricted. So prices are rising, profits are rising, and operators have the cash to add back jobs and concentrate again on customer satisfaction.
We have had rising airfares. We have had rising average daily rates for hotels, and that's because there's good business and leisure demand.
And those big fixed-cost theme parks, now teeming with visitors, are again becoming major cash generators for the likes of Bob Iger over at Disney.
What we did in California with Cars Land and the new Fantasyland in Orlando, and that obviously helps a lot. So our product is being welcomed by our public and is in demand.
Critics, of course, will argue that many of these jobs that are being created are low-skilled, low-wage, paying on average across the country below a supervisory level, $11.15 an hour. For Nightly Business Report, I'm Simon Hobbs.
But while all was good in leisure land, home builders got slammed because interest rates spiked on that strong jobs number. There you see most of the big names down between 2% and 4% today.
Attempts to strengthen sales with more brightly colored clothing, designer collaborations, and more attractive stores seems to be paying off for Gap. And that's where we start tonight's market focus. The clothing chain said third quarter revenue at stores open at least a year grew 4%, and that was well ahead of estimates. Gap also forecasts a better than expected earnings outlook for the third quarter. The shares were up a full 10% to $41.43. And investors liked Groupon's third quarter profit that came out last night. The Daily Deals site saw strong growth in North America and a 10% jump in gross billings. Revenue came in below consensus, but that didn't seem to worry investors today. The shares rose 6% to $10.11.
Shares of NVIDIA jumped today after the company posted a profit that beat estimates, raised its quarterly dividend by 13%. Revenue matched forecasts. The chip maker also issued a weak outlook for the current quarter because of a declining PC market and harsh mobile device competition. But NVIDIA shrugged off the bad news. The stock rose about 7% to $15.56. Cablevision returned to a profit in the third quarter. Revenue there up 2%, met estimates. But the New York area cable company lost 29,000 total customers from the second quarter. Cablevision facing increasing competition from Verizon and rising prices that media companies now charge to carry their networks. The shares there down 3.5% to $15.08.
Our Market Monitor guest tonight says despite the run-up in stocks this year, the market is not yet overvalued. He's Mark McCarron, Chief Investment Strategist at Drexel Morgan Capital Advisors. Welcome, Mark. Nice to have you here.
Thank you.
Let's start, first of all, if it's not overvalued, but are you still able to find value in this market? Because we always hear it's not overvalued, but it's fairly valued.
Yeah, fairly valued, no longer cheap, that's for sure. And the volatility levels are very uncomfortably low. So that combination isn't comfortable with us, but there are pockets of areas of interest, pockets of expensive stocks, but also pockets of cheap stocks, we think.
You know, Mark, jump in and tell us which sectors you like, and why don't you start off with your first investment pick for this evening?
Yeah, if we look across the world, global healthcare is obviously a big trend, and CVS is a name that we've held in client portfolios for a while, and clearly benefiting from what we think is going to be an increased demand for prescription drugs and well-positioned in the market. So that's one example, and that's a U.S.-oriented play. Mm-hmm. If you look across the world, and particularly in Europe, we've got some positive outlook, we think, on European pharmaceuticals as well.
All right. You also like some of the consumer stocks. Visa is one of them.
Yeah, Visa, we just heard a little bit early in the program about the increased travel and leisure demand, and a lot more payments are going through electronic systems, and Visa is obviously a major player there. It's a very competitive market, but Visa for us is a good opportunity to play that continuing growth.
You know, as we move on to another choice of yours, which I believe is Amazon, I'm noting that you seem to be picking or gravitating, there's nothing wrong with it, Mark, towards stocks that have outperformed the market. Do you worry that these stocks have gotten ahead of themselves and may slow down? How should I think about a stock that is, 12 or 15 percentage points ahead of the baseline market?
Yeah, if you look at it, I think it all depends on how you look at its growth, both at top line and bottom line. Amazon, I would highlight, is probably the most expensive stock that we have on this list tonight, and that's just because its earnings are quite minimal. Its growth on top line is significant. and its popularity in the market is quite strong. But Amazon, to us, benefits from that increased online purchasing, where they're taking market share from some of the other traditional retailers.
Mark,
I think it's very important to look at. Yes, please do.
Go ahead and finish your thought, Mark. Sorry.
I was going to say, if you look at that top-line growth in anticipation of earnings in the future, I think that's where you really have to look.
Could you address the overall market? Because at the beginning of the segment, you said certainly not, stocks aren't cheap, but you are finding pockets. That takes me to whether or not we've seen the lion's share of the run-up in the overall market, in the S&P, for instance, or the Dow for the year. Do you think we have a significant amount of room to run, or not so much?
Well, it's moved up quite a lot. I think the market's been more resilient than we thought it might have been, given the underlying economic growth. But I think if you look beyond just the U.S. into Europe and into Asia, there are a lot more opportunities, we think, from a valuation standpoint, and also to benefit from a rebound in Europe in particular.
Mark, among the stocks you mentioned, do you own any of them personally, or does your family?
No, none of those. Our clients do, but we do not know.
All right, Mark, thank you very much. Mark McCarron is Chief Investment Strategist at Drexel Morgan Capital Advisors.
Up next, an honest assessment of a multi-million-dollar idea. But first, a look at commodities, treasuries, and currencies.
It's Jobs Friday, and that, as usual, brings us to a new bright idea. Tonight, the entrepreneurs behind Honest Tea, made with real tea and less sweetener. Now, Coca-Cola bought the company in 2011 for a price reported to be above $100 million. So how'd they do it? Well, their bright idea, the next one, aims to explain.
Given all the drinks out there, you'd think this is a recipe for disaster.
For years now, Yale business professor Barry Nailbuff and his former student Seth Goldman have been telling the story of Honest Tea.
So a simple idea, tea that tastes like tea as opposed to liquid candy.
We had no pre-existing knowledge of the beverage industry. As we all know, it's a brutal industry. And yet we grew it from 5 thermoses and an empty Snapple bottle with a label pasted on it to over 100 million bottles a year.
Now they're telling and selling their amazing business story in a book, Mission in a Bottle. Out just 2 months, it spent 6 weeks as a New York Times bestseller. Like their less sweet drinks, it's different.
Just as the beverage industry didn't need another beverage, another Me Too beverage, the business world or the bookshelves didn't need just another business book.
A couple of years ago, Goldman noticed that one of his sons was hooked on comic books.
I was supposed to go tell him, don't read comic books to your homework. He kind of lured me in with the comic books. I said, then we've got to find a way to make a business book as engaging, as inspiring as a comic book can be.
Lessons that are learned visually really stick with people, right? That's why we do TV. If you want people to remember what you've done in the lessons, show, don't just tell.
Great tea is a nickel a cup. Bad tea is a penny.
Nailbuff did a show and tell at Comic-Con alongside New York artist Sung-Yoon Choi, who took on the arduous task, about a page a day, of converting their story into a graphic novel.
It's not rocket science, but it wasn't easy either.
It's not fiction, so I prefer that. We should call it novel graphic.
Novel graphic.
The process was novel too.
I've never read any business book before.
She learned things like how they expanded beyond natural food stores and how a decision to buy a bottling plant cost tens of thousands of dollars a day. Then she turned their lessons into what amounts to a screenplay.
There were countless rejections and a few near-death experiences for the company and ourselves.
Those bubbles are basically the length of a tweet. And so it's written in tweets with good grammar.
But our story has so many visual elements, whether it's the tea gardens, the label design, the bottling plants, the personal stories that go on. And this is a way to make the story really come alive.
I try to make you or Seth react to the objects that you're explaining.
Choi grew up in South Korea reading manga, a Japanese style of storytelling. In Japan, the manga business has been estimated at $5 billion a year. Here, it's a tiny fraction of that, maybe $200 million.
Anything that could happen in the life, like using the life story, like manga covers all that.
Nailbuff has high hopes for the comic format. Mission in a Bottle has already popped up in college classrooms. not just at Yale, but at Michigan, Maryland, American, and Babson.
You're able to take complicated ideas and by illustrating them, get people to pay attention, have it sink in.
He may be on to something. Earlier this year, a University of Oklahoma study showed students retained more information after reading a graphic novel than a traditional textbook.
It's not as if people are doing a lot of homework these days. So if you get somebody to read it and remember it, call it a victory.
A different medium delivering a potentially valuable message.
This book is really emphasizing all the things that went wrong, because if you can avoid the mistakes that we made, that will save you millions.
It's a guide to building a mission-driven business in a profit-driven world.
Seth Goldman is still in charge of that mission, staying on as TEO at Honest Brands. Barry Nailbuff, no longer with the company. He kept his day job teaching at Yale, where they sing Bula Bula. He's got the moolah. That's their fight song, as you probably know.
He does.
Such a simple idea, but from often the simplest come the greatest fortunes.
Come the greatest fortunes. That's so true. Have a great weekend, everybody. That's it for Nightly Business Report for tonight. I'm Sue Herrera. Susie will be back here on Monday. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening and weekend, everybody. We'll see you back here on Monday night.
Nightly Business Report has been brought to you by
TheStreet.com. Up-to-the-minute stock market news and in-depth analysis. Our quant ratings service provides objective, independent ratings daily on over 4,300 stocks. Learn more at TheStreet.com/NBR.
I'm Tyler Matheson with a Nightly Business Report news brief. A surprise increase in U.S. job growth sent stocks higher today. The Dow rose 167 points at another all-time high close of 15,761. The Nasdaq jumped nearly 62. S&P 500 added about 23.5 points. Employers shrugged off that 16-day government shutdown in October. Payrolls increased 204,000, but the jobless rate ticked up to 7.3%, partially because furloughed workers filed for unemployment benefits. Home builders got slammed because interest rates spiked on that jobs report. Total e-commerce sales in the U.S. rose more than $53 billion in the third quarter, the 16th consecutive quarter of year-over-year growth. And the price of oil closed up 40 cents to $94.60 a barrel. And tune into Nightly Business Report here on your public television station.